Today we're going to talk about something very simple but very needed in your understanding in order to be a profitable trader. We are going to be talking about equilibrium. What is equilibrium, how to use it, how to spot it, and how to correctly base your entry off that. Let's get into the video. So guys, as you can see, we are now inside of the charts. I just took a random pair, this is Euro JPY. I'm going to show you and teach you about equilibrium. So first of all, what is equilibrium? Let me show you that first. So let's just create a graph right here. So basically equilibrium is right in the middle of your current price lag. So this will show you two things. And I'm using this tool for this. This is called the Gambox tool. If you want to use my settings, here you go. These are my settings that I use for the Gambox tool. It's basically a little tool that I use for pointing out equilibrium. So equilibrium will tell you two things. It will tell you the discounted price and it will tell you the premium price. So what does this mean? Basically, investors, traders, bankers, whatever you want to call them, we are always looking to buy stocks, crypto, forex pairs, doesn't matter, just an asset, and we are always looking to buy an asset in a discounted area. So for example, right here, you take it from the bottom of your current price tag to the top of your current price tag, everything underneath it. So every time when price comes underneath that equilibrium level, and this is your equilibrium level, this is 0.5, you are willing to buy the stock. So let's see right here, from top to bottom, we are underneath 50%. Right here, bottom to the top, we don't come underneath the 50%. And you might say, okay, but we still went up after that. Correctly. But overall, we want an edge to play out, of course. And in this case, our edge is buying in that discounted area. So if we then all of a sudden are going to start buying in the premium area, and as you can see right here, if we now would buy in that premium area somewhere around here, we would get stopped out massively. So you have to understand that the highest probability for your trade to play out if you're trading a trend is to buy in the discounted area. So if we are in a downtrend, and it may look something like this, we do the exact same thing. From the top to the bottom of your current price lag, you want to sell everything that comes above that equilibrium level. Same thing right here. Top to bottom, sell everything above that equilibrium level. Top to bottom, everything above that equilibrium level. Top to bottom. As you can see, we don't come above that equilibrium level, we leave it alone. So let's take it to the live charts and let's search for some examples on here. So we are on Euro JPY, like I said, we are on the 1 hour. So it is first really important that you determine your trend that you're in, of course, because we are trading with the trend. So you need to know the current trend that you're in. Are you bullish or are you bearish? So this will be something very important to know before you start marking out your equilibrium levels. So for example, right here, of course, how do we determine the trend? Let's go to the higher time frame first before we can start lowering down the lower time frame to determine the current trend. So if you look at the 4 hour, what can we see? I would say a big consolidation zone up here, since we came out of quite a good upwards trend. But what I always do to determine my trends is I am going to determine the highs and the lows. So this is the highest point right here. This is your low. This is your high. I would say these are equal highs. And right now we broke our previous low right here. So on the 4 hour, we are in a downtrend. Let's go to the 1 hour. Right now we have established our 4 hour trend that is in a downtrend. So we know we are going to look for bearish trades. Then we are going to use our Gambox again. And we're going to do it from the high to the low right here. And this was news, guys. So this is quite a different example, but you can still use it, of course. Everything above the 50% we are buying, or we are selling, sorry. So everything above the 50% we want to sell. Let's go to the next example. Right here, you didn't know you were in the downtrend yet. So let's take it from here and let's do it with the uptrends. Okay, let's do it from here. So let's go to the 4 hour to confirm it first. So as you can see, 4 hour, huge uptrend. And right here we were consolidating, and right here we broke out of the consolidation zone, so that is a confirmation for our uptrend. So let's go to our 1 hour again, and then I think we are right here. So it is important for your equilibrium, once you break your previous high, it is important to shift your Gambox to the nearest low, basically the lowest point that created that high to be broken. So right here, in this case, it is this low that broke this high. As you can see, this is the lowest point that formed a break of structure right here. Let me mark this also out. This video is brought to you by HenkoTrade. HenkoTrade is a broker that offers very low spreads on indices, commodities, forex and even crypto. I mean, look at those spreads, for example, on forex pairs. It is insane. And yes, these are live spreads. They're also offering a 100% bonus at the moment. So basically for every penny that you deposit, they are doubling it. So for example, if you're depositing $500, they're matching it with also $500. So you have $1,000 in total. So if you're looking for a broker with low spreads on indices, crypto, forex and commodities, I would say check out HenkoTrade. So break of structure. And this is really important, guys, that you always take the lowest point in an uptrend that breaks the previous high. And that is how you will mark out your box. So you can see right here, we came underneath equilibrium. We came inside of an order block. Was a perfect trade for you to take. Let's go a bit further. So now the high has been broken. So this will be the high that you want to see broken next. And you're going to search for the lowest point after that high has been formed that caused that break. So in this case, this is a news candle and it made the low and also broke the high in one go. So this is your high, this is your low on a lower time frame. So right here, as you can see, we came underneath the 50 after this happened right here. And that could be a trade for you. Of course, this was news, so it is a bit irrelevant, but it is just to show you that it works there as well. So now our new high is this one right here. It gets broken 2 hours afterwards. So we take again our Gambox from the low that broke that high. And now it is important what makes a high a valid high to take it from, because of course in this case you can keep on shifting it every single time. Guys, a high that is valid to take it from is a high that also creates a pullback. So in this example right here, it created a pullback. In this example right here, it creates a pullback. And this example right here, it also created a pullback, but it was very, very closely inside of a 5-minute, 15-minute time frame. So right here, this becomes our new Gambox from the low to the high. As you can see, we don't come underneath the 50%. Then we will shift it further. This is the lowest point that broke the previous high. As you can see, there were no pullbacks at all in here. I would say up to this point right here. Of course, it didn't come underneath the 50%. And that is the thing with the trends lately this year, and also very, very much with yen pairs, is that they just are so bullish. We set this high. So now the lowest point that broke previous high right here is this one. And we could argue that this one is an internal pullback on the 15 or on the 5 minutes. Again, it would come underneath the 50%. I think it is pretty clear that it does, right? I don't have to zoom in right there. Then this will become the lowest point that broke the previous high, that is this one. And I would say all the way up to here. As you can see in this example, we are just shy of the equilibrium level. Now we shift our Gambox again a bit higher. This will become the low. This will become the high like this. And as you can see, we come underneath the 50%. And even underneath the 0%. So in this case, I would say it was very, very good if you would have taken it like this on a 4-hour example, where there are no pullbacks, of course. So as you can see, we have our pullback 4-hourly. Then right here, we have our high. We come underneath the 50%. And this is a very good example of a 4-hour equilibrium level, guys. And as you can see, there is also a lot of displacement coming out of there. So now I hear you already thinking, okay, this didn't work on the 1 hour, it did work on the 4 hour, which one should I take? And there's really no right or wrong answer for that, I would say. It is really depending on the time frames that you trade and on the times that you trade inside of your trading day. And if you want to use the 4 hour, if you want to use the hour, it's all perfectly fine. You can also combine them, of course. That's at least what I do. Because the higher the time frame you will use, the more confluence there will be behind it. So now let's go low to high right here. And again, underneath the 50, we have a very good reaction of this. So as you guys can see, it works as a charm, but the very important thing is that it only works in a trending market. If we are in a consolidating market, like this one right here, it won't work, guys. So what is very, very important with this strategy is that you wait for those break of structures to occur. Right here, let's say this is your low, this is your high. And as you can see, we come underneath the 50%. You take your trade, right? Because that's the plan. As soon as you see that we are not breaking this high right here and we are just struggling around and we are going down again, I want you to close your trade, because this will indicate to you that we are or consolidating or the trend is reversing on you. And even though we might come down to the 60% or the 70% and then turn around, all good. You just let it be because this is your edge. So then you want to focus when you close that trade if we are getting break of structures the other way around. So let's see right here. We have our low that is broken right here. So right now you have a break of structure the other way around, and this is also called a market structure shift or a change of character on the lower time frames. So what do you do right now? You do the exact opposite, guys. You take your high to the low, above the 50, you take your trade. Highest point to the lowest point, above the 50, you take your trade. Highest point to the lowest point right here, above the 50, you take your trade. In this case, it would have been a losing trade. So again, how can you prevent this, or at least help your capital to be protected a bit better against trades like this? If it comes above the 50 and it starts consolidating for hours and hours and hours, get out of the trade. This means that there is not enough volume to push it down any further, and that we might see a reversal going higher again to take out more liquidity, or that the trend reversal is over and that we are just continuing the higher time frame trend. If that happens, you close around here, around break even or in a loss, again, you change your strategy. So we cannot take this trade since we were in a bearish trade right here. So we do it from here. High, low to high, underneath the 50, you take your trade. You do the same thing again right here because that's the plan. Low to high, underneath the 50. And what happens? You start consolidating again, guys. We start consolidating, you close your trade, you take that loss, you just got your loser sold, right? And you're out of the trade. Or you let it go to stop loss, that's completely on you. Then again, we come underneath the 0. What happens? We have our break of structure. So right here, break of structure, or what is also called a change of character, or market structure shift on the higher time frames actually. But let's just call it a change of character right here. So that happens. Then what do? We take our gam box from the high to the lowest point right here that created the pullback. Come underneath above the 50, you take your trade lower, and bam. Then you take the highest point to the lowest point, above the 50, you take your trade, and bam. You would have probably been stopped out in this case, unless you took it right here. But again, like I said, this was a new scandal. Guys, as you can see, this works as a charm, and I'm certain that if you are not using this and you start using this now, it will change your trading immensely. Some key notes to remember are that really wait for the change of character to occur if you want to see a change happening inside of the market. Wait for a break of structure to occur if you want to know your current price lag. If price starts consolidating or fails to break your previous high, previous low, the one that you were targeting, close the trade. And if you get stopped out or you close the trade, in that case, change biases, because the change of character might have happened already or is just around the corner. Guys, I hope you enjoyed this video, and I will see you in the next one. Bye bye, guys.